The most significant development in the history of digital assets is the recent approval of the XRP Exchange Traded Fund, or ETF. It just rocked the world of finance. After years of rumors, court battles, and regulatory uncertainty, the SEC has finally granted the approval that will completely alter the situation. For the first time ever, institutional investors like hedge funds and pension funds can now directly invest in a fully regulated ETF. This isn't just another significant advancement in cryptocurrency. The majority of people concur, which is exactly what the XRP community and Ripple have been waiting for, and it's making a ton of money that might alter the functioning of the global banking system. Now, behind closed doors, major corporations like Vanguard, Fidelity, and BlackRock have been preparing for this precise moment. For months, insider information and leaks had indicated that these businesses were covertly strengthening their positions as they awaited regulators to clarify their positions. Now that the ETF has been cleared, they can proceed. Trillions of dollars worth of capital are available to invest in the XP ecosystem. People are already referring to this as the largest institutional on-ramp since the initial approval of analysts' ETF for Bitcoin. But unlike Bitcoin, XRP is more than simply a speculative investment. It was designed to go settle and be a part of the global payment system. The potential upside for XRP is significantly greater because of this disparity. Look at it, XR is currently being utilized as a bridge currency for improved cross-border transactions, enabling large banks worldwide to move money swiftly and affordably. Standard finance, including sovereign wealth funds and pension plans, can now participate in the ETF. They are not required to interact with private wallets or cryptocurrency exchanges. That allows for what experts are referring to as a 2 trillion cash flow. This is actually taking place, and XRP is directly at the center of it. Standard asset classes are losing ground in programmable digital liquidity in terms of wealth. The effects are just astounding. 100 billion XRP tokens are available. Only a small portion of the supply is trading on open markets. The majority is locked up in Ripple's monthly escrow releases. Consequently, new ETFs will need to compete for float, which is getting harder to find. Institutional inflows may soon make everyday trade volumes appear insignificant. This will result in a supply shock that has never occurred in the financial industry. When demand is extremely high but supply remains low, prices fluctuate rapidly. Because it's basically fundamental economics on a multi-trillion-dollar scale, leading economists and experts are whispering a number that formerly appeared inconceivable. Before the end of the period, each XRP will cost $300 a year. This is not merely conjecture. Examine what transpired with Bitcoin following the approval of the first Bitcoin ETF. As institutions purchased it, prices skyrocketed. Additionally, remember that this was for an asset whose sole purpose in the actual world was to store value. However, banks, states, and companies have all consented to adopt the real payment system that XP provides. It is comparable to the pipelines that will link the banking network of the future. Consider an institutional hunger similar to this, but this time with usefulness-based value. It's more than just talk. It is a method for defining prices that increase exponentially over time. Rumor has it that Ripple has been collaborating behind the scenes with major custodians and asset managers to ensure that the ETF has access to sizable cash pools. Some claim that BlackRock's iShares XRP Trust, Fidelity Digital Assets, and Goldman Sachs Blockchain Division are all involved in conspiracy to tokenize and settle portions of the ETF directly via the XRP ledger. If this is accurate, it indicates that the largest banks in the world are both purchasing and contributing XRP. The best indication of sustained allegiance is this. However, this story is not as simple as it seems. The modification of the rules. Here are Bob's thoughts on this, the SIC XRP issue. Approve the ETF represents a significant shift in its stance on XRP. After years of being referred to as an unregistered investment, XRP is now regarded as a digital good or even a payment token as a result of its permission. The last thing that organizations have been waiting for is this unambiguous regulation. This removes the final barrier to broad acceptance. These days, each bank, money transfer provider, and payment processors who were previously undecided can safely integrate XRP into their systems. XRP transforms from a dangerous cryptocurrency to a legitimate asset class that is suitable for investment with this new legal assurance. Not to be overlooked is the economy's overall picture. Globally, there is a great deal of debt. Safe havens are less secure than they once were, and prices are rising. The world is a difficult place. Institutions are in dire need of new high liquidity assets that provide easy and rapid money transfers. XRP is the ideal solution in this case, since it may be utilized as a settlement asset, extremely minimal fees and nearly immediate finality. You have the ingredients for historic capital rotation when you also consider that investing simple for investors worldwide. Experts predict a multi-phase bull surge when the ETF begins trading. The initial price surge will be brought on by the entry of both regular investors and speculative traders. Then, as funds restructure their portfolios to incorporate XRP, significant institutional flows will begin in phase 2. The third, the most crucial stage, will start when tokenized asset settlements incorporate the XRP ledger. This will enable the movement of real-world assets across XRP's rails, including its commodities, bonds, and currencies. The business sector is about to undergo a lot of changes. At that point, the 2 trillion zero figure actually has some significance in terms of both market value and transaction volume. The supply shock will occur immediately and will be quite severe. The ETF will be removed from exchanges and placed in cold storage since it must contain XRP. The amount of circulating stock will soon run out. Large sums will become more difficult for individual purchasers to get, whereas institutions will need to place higher bids merely to satisfy demand constraints. This is the way establishment greed operates when there isn't enough. As you can see, this is the precise reason why prices are so high. Finally, it's happening. XRP users have been anticipating this moment for years. According to some analysts, a new age in banking is about to begin, one in which blockchain technology and conventional finance will fully integrate. Additionally, XRP will benefit the most since it is the most clear and effective cryptocurrencies. Whether it be digital central bank currencies, tokenized real estate, or cross-border payments, XRP is designed to serve as the bridge connecting the next generation of financial institutions. What does this lead to then? The market value of XRP might reach tens of trillions of dollars if only a small portion of the money that is currently in the global bond and currency markets moves into the ETF. We arrive at the 300 price per token in this manner. It is not merely trace a mark, a dot, or a dream. It isn't. When you consider its simple math regarding how much money is going to transfer, all eyes are on the figures for the amount of money entering the funds as the first week of EF trading begins. According to reports, the XRP ETF may have already traded over $5 billion in just 48 hours, matching the value of Bitcoin's first ETF. In addition to hitting new all-time highs, XRP will become the world's first truly utility-backed institutional asset if this trend continues. The age of speculation is over. The era of utility-driven adoption is just getting started. The approval of the ETF is not merely a market occurrence. It serves as the catalyst for the next significant shift in global finance. It is simple to see that the days of XRP being the outsider vying for attention in the new economy are long gone. The best bridge is this one. One thing is undeniable when more institutional capital enters the market. The moment for XRP has come. Please remember that I am not a qualified financial advisor, Bennett. These films are just intended to be fun, not educational. I always advise before making any financial decisions. My audience to conduct independent research and consult experts.